Hi guys, hi everyone. Good morning, good afternoon, good evening, wherever you are. Welcome to Vantage webinars. Can you guys hear me clearly? Wow, it's at the all-time high again and again. I think today, since the market open, the gold has moved. How many pips? So while we are waiting for everyone to tune in, we're gonna look at the gold. Okay. You see that? I thought like the day before it was like kind of pull off here. It is just a give me of like a fake price action. The day before, like yesterday, bounce, and I think now since the market open, I'm gonna here it's almost if I'm gonna put from the swing low, okay, to the current price, that would be 10,000 point already. Oh no, somewhere around. Yeah, it's about 11K point, 1.1 point, 1,100 pip. Okay. So right now, I don't know. You see that if I want to use the extension, there is no extension I can use because it's it's so crazy. It's really crazy, right? You see that? Where can we buy? Okay. If you keep buying, but then I don't know where can I buy, where can we sell, right? So um either in H4 I just have to wait for price to pull back here, right? But you see that, but they never pull back. They have really small pullback, somehow small pullback and keep rising. So, right, you see in the lower time frame, it's small pullback, right? Pullback, small pullback, small pullback. And I believe that here someone who like pay for the breakout, they're gonna buy from this level. Okay, so yeah, I don't have any position for gold at the moment because it's so crazy. So I'm gonna let it go first. All right, guys. So shall we just begin our session? Again, thank you so much, guys, for joining me today. As you can see, today is about trade management. And again, um, before we start the webinars, guys, disclaimer as usual. So please note that everything we cover today is for education only and does not constitute financial advice or a recommendation for you guys to buy or to sell any instruments. You are responsible for your own trading decision and risk. And risk warning, trading forex and CFD carries significant risk and is may not suitable for all investors. Speaker today, guys. My name is Peggy. I'm an investment analyst and a prop trader. Um, so currently I'm trade for the pop firm. I'm trade for my own account, and last year I started to trade futures as well. Okay, and this is the agenda for today. So we're going to cover when break even hell versus when break even hurts you. Partial profit framework 1 to 2 scale out. Telling logic tied to structure, not emotion, and we're gonna do the live example together. Okay, so when break even helps. So we know that the break even will help you to protect your capital. Okay. So psychological protection eliminate risk after achieving one more than 1 hour profit. But to be honest, whenever you want to use break even, it's up to you. Okay, meaning that when price is falling, some of the trader they will that's like aim for one-to-one risk and reward. But if you talk about PIP, especially if you're trading gold, maybe when gold is like falling 30 to 50 pip, you might chip stop loss to break even. Okay, low volatility environment, so work well in the slow trending market. New trader, so build confidence and prevent giving back gain. So for example, like no, I know that goes on uptrend. Okay, if you were to short go, this is your SL, right? What you need to do if you short, if gold is falling, okay, I just maybe go move to a 20 pip or 30 pip. I already chip stop loss to somewhere here. Okay, because we know that we trade again the trend, high chance that gold might have to reverse, okay, and hit your break even and maybe make an all-time high. At least if you short gold, you have a break even, you still keep your capital. All right. So right now, like I just mentioned, I don't have any position with gold at the moment. Okay, I let it run. Lower time frame, so protect against quick reversal in scalping. Okay, risk-free trade. So one profit risk 1 hour or more, moving stop to break even, lock in a worst case scenario of zero loss. Right. So a lot I have someone I know in my community, they are like they are scalper. So usually they like to scalping like go like 20 30 pip or 50 pip, right? So whenever go falling only 10 pip, they are cheap stop loss to break even. Okay, just in case that price is hit stop loss, at least you risk like $0. But what if like you short here and then go it falling? Oh, happy for you. But 10 bit 20 keep stop loss. If it's break even, sorry, break even, at least you don't gain you and you don't lose. Okay. But right now, go skip all time high, so guide on short. Okay, wait for the pullback. And when break even hurts, so swing trading contact, so cut off winning trade during normal retracement. High volatility market gets stopped out by noise, not through reversal. Premature movement, so moving to B stand for break even too early reduces expectancy. So sometimes, right, if you move stop loss to break even or set B too early, okay, sometimes price just maybe reward, hit your B or break even and then price is falling. Okay, so you can use like cheap stop loss by using either Fibonacci level or you can use those like swing high and swing low. Okay, like price falling. For example, like if you were to sell here, okay, and then there is a swing somewhere here. Price is falling. This is a swing low, right? Swing low. If price is falling and it close below this on your left swing, you can cheap stop loss to, break even at least like below the swing low here because price has already broke. Okay. Sometimes if price reward hit the stop loss, at least in this room you lock in some profit. Okay. All right. Okay. Let's continue. Mm. Okay, so here, so the break-even paradox. So protecting the capital by moving to break-even can actually reduce your win rate and long-term profitability if done mechanically without market contact. Rules only move to break-even if aligned with structures. Okay, partial profit. Anybody use a partial profit? So usually I use the profit when price is falling and then I like close 50% of my lot size. For example, if I short gold one lot, right, I just maybe close with 0.5 50%. Sometimes you can just close by 20%. So it's up to you. Okay, but usually I will close 50% and then another 50 percent I let it run. Okay, so why take partial profits? Psychologists lock in win. Okay, reduce fear of giving back. Easier to hold remaining position. Build discipline. For example, now we know that goes on uptrend. We know that's going on uptrend right now. Here, right? It goes everything here. Imagine it's like you have buy one of the thing that's let's say you buy here at the pullback. Okay, this is the resistance and this is all-time high and a breakout. You see that and pullback. Let's say you were to buy here. Okay, you were to buy here, right? You buy here either one you cheap stop loss. For example, this is a stop loss. Straight stop loss. One you cheap stop loss to set B. and then you let it run. Second, if we're gonna short, sorry, not gonna short, you buy, like you buy here, let's just say one lot. Okay, maybe I close partial, I close 50%, so I close 0.5, lot another 0.5, and let it run. And then what do? I use a trailing stop loss to test up. For example, here, break out here, I put my stop loss here. If break here, I put my stop loss here. And then you can see that price still make the higher high, higher low, higher high, higher low, higher high. And now you see that it break out and retest. That's why there will be someone who buy from here where um 52.60. Somewhere around here, you see that break out and retest. Okay. We continue. Right? And risk management, reduce overall exposure, protecting against reversal, allow for tighter stops, improve risk-adjusted return, expectancy, capture some risk and reward multiples, let runner continue, balances certainty versus upside, optimal for most traders. If like you like to run trend, you just pick shift stop loss to break even, or you take partial profit. And after that, you will see the framework, right? Simple. So here, for example, why did my uh, uh, the the slide is like that? Let me see. Let me make the adjustment. Okay. So framework one. I'm gonna just adjust it nicely. Okay, so for the framework, single partial. So basically the simple and effective for the most trader. You take 50% of risk and reward like 2R on the first target, move stop loss to break even and remain 50%. Okay. Runner right to 3R, 5R on tailing. You can use that. Guarantee winning at least, risk and reward which is one. Okay, 1R on runners because why you close 50%, right? But some of the trader they will just close like 20%, meaning that either you trade with one lot side, you close 0.2, then you let another 0.8 run. Okay, so it's all up to you what the strategy that you guys want. Okay, but usually I close like 50%, which is 0.5, and then I let another 0.5 run. Okay. Example here, right? Entry $100, risk 1%, $5. You take 50%, 2R, meaning that $10 you close. Runner hit 2R plus another 20, total profit, which is $30 or 3R. R which is risk and reward. Okay. Um, oh, okay, let's continue. Yeah, framework two. You close two partial, so at one scaling for the largest position, take 33% off at 1.5 to 2R for the first target. Take 33 off at 3 to 4R on second target. Let final 34% run with the tailing stop loss. Okay, allow for the early win part extended runner. So this is for largest position. Okay. You can see that scale out comparison strategy or nothing. One partial, one R, two partial, 1.5 R. Okay, all or nothing maximum risk and rewards, like nothing. Okay, of course, bad for the huge runner. Okay, but if you close one R, meaning max high balance, based for the balances, right? Two partial, 1.5, maximum R, which is a medium consistency for the best. You will have the consistency, but usually there are some the trader uh they don't close the partial profit. What but what they do, they use the trailing stop loss. They don't close at all. Okay, they just let it all. Let's say they buy one lot, they just let one lot run. Okay, they don't even like close any lot size, and then they just shift stop loss to break even, and then they let it run. Okay. Mm, okay, let's continue. Telling stop loss. Okay, telling stop loss. This is a lot of the traders are using this. Okay, so what they do, telling logic follow the structure, emotion telling, fixed percentage, 2% telling stop loss, time based. I have been in 2 hour, dollar amount. You can use either like up 50% protected, fear driven. What if it reverses? Those ignore market contact. But when we use the tailing stop loss, which is structure-based tailing, below pair swing high and swing low, right? So whenever you want to use the tailing stop loss, for example, here we're gonna use like that. This is price make a high high, right? Higher low. So what you do, let's say you buy gold, for example. When price broke this level, this is your SL, correct? You're gonna keep your stop loss here. Okay, when price broke this high, you're gonna move your stop loss to here based on the swing high and the swing low, not based on the emotion or how many percentage, or you want to like, oh, I earn already price rise and my balance, or you earn 500 and then you shift. No, this is by structures, okay? And you can put be high or below the support level or the key resistance or the key level, or you put below moving average. Let's say you use 20, 50 EMA. Okay, outside recent consideration zone. For example, let's say we are is uh, here. I'm gonna I'm gonna pull out the chart, right? You see that prayer breakout. Let's say if you were to buy gold right here, breakout retrace. You think gold can go where? I don't know. I have no idea. It should be maybe go all the way to 5,003. We're talking about psychological number, or maybe like 2590. That would be one. Okay. Okay. Let's just see here, right? So let's say price now. What do you see that you're gonna move the stop loss right here, right? Now you're telling stop loss. Your stop loss is gonna be is here. This is your stop. Oh no. Stop loss. Right? This is your stop loss. And let's say this is your buy. This is your let's just say this is your original buy entry. Right? This is your original buy entry. From here, you put the stop loss below this. Correct? Because you buy, price have broke above, pull back, you buy. So when price is rising, you shift stop loss to break even first. And if price broke above this swing high, okay, you shift stop loss to this low. When price moving break above this, you shift the stop loss below this swing low. Why? Because if price continues to go uptrend, they sh they shouldn't go and make a lower low, lower high. Correct? They're gonna hit the stop loss. From this is gonna be your lock-in profit where here to here, here to here. Correct? Now price is moving back, breakout here. Then you shift stop loss where to this level. Okay, so this level. Now it break out, you shift stop loss with this swing low. Okay, this swing low. So at least you see that this is the room that you earn the profit if you buy in this entry. You see that how many pip you lock in if price hit your stop loss 6,500. If I say you buy one lot, you would have earned 6.5K with one lot size for gold, right? If you buy 0.5, you just, it's about how much? $3,250. No, yeah, 3,250 plus, you buy 0.5 lot. And now they're still, right? Now they're still selling. Either now you say, okay, I want to make sure that price didn't come, then I will put at this swing low. Because price have broke out and this is my swing low. So if price reverse, at least I lock in the profit from here to here, 7.5. 7.5K, for example, one lot, but you say that, okay, I'm happy with the profit with like 7,000. You're gonna put the stop loss where slightly before this swing, at this swing. And then you lock in profit at this 7,000 pip for gold. Okay, this is how you use. But a lot of people they buy in where they hold the position since they break out of the 5,100 for gold, somewhere around here. And you see that from here, whoever want to buy from either you buy the market price or you put the buy stop order, right? You see that breakout, slightly pull back. You see here it pull back is about 3,000 pip. That's quite a lot though. But nowadays gold is moving about like you see that it's about 3,200 point or 300 pip, right? And after that, it just move here. So of course the lower time frame you'll see there's a pullback, right? Pullback, slightly pullback, rising, slightly pullback, rising, pullback, and fly high. Mm, okay. And I think currently now we are in the pre-market for the London already. Okay, so I think now they keep buying because maybe last night or Trump has said some things about like dollar. Okay, so that's why you see that dollar is, oh, there's a gap up. But why is it dollar is going to close the gap? Steady, right? Dollar, you see that everyone is selling off dollar. Why? Because they want to disvalue the dollar, right? You see that dollar is still falling. That's why you can see the EU rising, GU rising, UCAD falling, of course, right? You're selling off the dollar. Everybody don't care about dollar. You can see that. You see that. Aussie also rising, selling off dollar, also falling. Aussie still rising, and talking about gold is also fly high right now, right? So talking about correlation, I mean talking about the dollar gap down here, there's still a gap. The support level it break below support already. I think for the D1 could fall all the way to this level, meaning that negative correlation go continue to rise. Okay. See that? Mm. Let me continue. Oh, moving over, talking about the EMA, right? The EMA, how to use the EMA? Let me pull out. Let's just do the 50 EMA, right? Where 50 EMA? Okay. You're gonna use this EMA. EMA is here, right? So meaning this one you buy here, but let's say you're gonna use the EMA. We're gonna buy here, right? We buy at this level. But in this case, our EMA 50 is where? It's here. So you can shift stop loss using the EMA. You just put it slightly below. Because in this case, EMA is my acting at the support level in the M30, M15. If you go to the M5, right, you put below this swing, which is this is the EMA 50, right? You see that? So right now, um, the higher price would go all the way 52.84. And then we kind of see the rejection. These are London. So now we're going to see whether the London session, they're going to buy gold or they're going to sell gold first. You see that? You remember just now I said a breakout and retest on the M share, right? You see that? Breakout and retest 2,000 point for gold. So just breakout for the M15 here. You see that breakout, this candle and retest because before that it was being sideways. Okay, you say that you break out, then you buy here. And now they continue to go. So I don't know. Okay, don't know. What we're gonna do? We're gonna wait until the at least H1 to show us the confirmation. Okay, you look at H1. Buy. There's no rest candle for us to sell gold. Okay, just small pullback in the lower time frame. Okay, but then look at the structures. Always, guys, always look for the structure chip, right? In order for both, means that they need to pull back like that. But they break out of the box, right? They break out of the box. So in order for them to make a market structure, you need to break below, pull back, then we can sell. Okay? Meaning that if you to buy, you're gonna hit our stop loss here, and then you can change from the buy to the sell entry. Okay? Any question, guys? Any question? No question? Shall we continue? Okay. 3, tell you stop loss technique. We let's say that you put on the swing low and swing high, right? Tell stop below is new. Okay. Higher low uptrend or above, lower high on the downtrend. Okay. Moving average, you can use close below to 20 EMA. Okay, let me change here to 20 EMA. 20 EMA to be like above here. Okay. Uh, it's yeah. It is. Okay. It's a 20 EMA. close below 20 EMA, then you exit, right? So this is, so if price close below 20 EMA, you exit your position. Okay, you exit the position, meaning that you see they're gonna break. If they close below, meaning that they're gonna break at this level, and then the structure is gonna change, right? If they're gonna break, they're gonna close below, hit the stop loss, then you're gonna change like that, meaning that the structure has changed because they broke below this support level. This is EMA 20. Okay. Another one, you can use the ATR base, so tells by using the 2 to 3 ATR from the recent high adjust to volatility automatically. So how to find the ATR? How are we gonna find the ATR indicator, right? ATR, average true range. Here, based on this ATR, based on H4 time frame, go move 5,400 point or 540 pip. Meaning if you're gonna use two ATR, you use 54 multiple by 2, they just round is about 1,000 pip. Okay, meaning that if go move 1,000 pip, then you can use the trailing stop loss. Meaning, let's say you're gonna buy here. Okay, you're gonna buy here, for example. You're gonna buy. You're gonna buy here. You're gonna buy here. Uh, here, right? The it just says you buy at the breakout. You see that price has moved. If we're gonna use the two ATR, moves about how much? I'm gonna rouse about 10K. Okay, meaning that you buy in here. Let's say you buy the breakout, you're gonna chip the stop loss you put here, and this is gonna be your buy entry when you pay the breakout. 2R. Okay, this is a ATR. How you get? You look here. 52, okay, is 5,400 pip is the point, sorry, the point is the pip is 540 pip. Then you multiply by 2 because you want 2 ATR, so they just said about 1,000. 1,000, but here is the point. If the pip, you just divide by 10. It's about 1,000 pip. Okay, so here, you see that? Okay. And now price is falling. Okay. So now we're gonna see whether price gonna hit our stop loss or not. Okay. We're gonna see price gonna hit our stop loss or not. But now price is kind of falling. So if you want to sell, remember you need to wait for price to close below this level. Okay. You need to wait for price to close below this level. Okay. Oh, I don't know why there's like weak here. You see that now that they go move. It's so quick, 50 pip. Okay? That's it. How we gonna use the ATR. ATR stands for average true range. Uh, okay. When break even health, this one we already cover. No consistent position. Okay, this one I think that's what this was the last slide. I'm sorry. This was the last week. But we can cover. Okay, so let's talk about this. Oh, oof. Okay, just cover this since we already talked about break even. Okay, so no consistent process equal to emotion decision, chasing trade without proper analysis, no clear rule for when not to trade, learning from losses without a review system. Okay, for the break even. Okay, guys, do you guys have any question before we look at our chart together? Okay, so my last slide gonna be the key takeaway today. Okay. So the notice. Okay. So the key takeaway today. So basically, they will say that break even isn't always the best. Okay. We're gonna only use when it aligns with the market structures. Okay. Partial reduce pressure. Taking 1 to 2 partial let you lock in wins while keeping runner alive. Tail with structure, not fear. Either you use EMA or MA or you use ATR or you can use the EMA 20 if price close below EMA 20 and then you just close, okay, the stop loss. Build a repeatable system, predefine your target and management rule before entering the trade. Okay, guys, that is like for today. Any question? Any question, guys? Okay, if not, shall we look at the chart together? Okay, now what we're gonna do? Anybody? Okay, this is a breakout retest I'm gonna put here. So right now, price somehow stopped at 52.84. Why price stop here? We have no idea, but what we're gonna do? Okay, talking about psychological number, price close below somewhere here, 52.81 or somewhere around here. So now, what we want to see, if you want to sell, okay, if you want to sell, remember, price have to close below this low. In the lower time frame structures, they need to close below this low. The pullback, either here or somewhere around here, and then you sell. Meaning that if they continue to go to this, break this level, okay, meaning that H1 is gonna close with bearish candle. Okay, but right now, what we need to do, at least H1 give us some bullish candle, bearish candle. This is just a break. Even though like this one, when you sell, right, you might get a few pip by selling like at somewhere around this zone, right? Falling and now it break out. Okay, let's see. Guys, you can request, okay? Let me know if you have any instrument you want me to look for you. Let me see the question. Okay, I'm gonna continue if you guys don't have any question. Right now, okay, it look quite promising here. But what we want to do, we just want to see, okay, how the market gonna react. This is structures that we want to see in the M5. Okay. Price have to break below this. If not pull back, if not pull back somewhere here, okay, if not pull back, doesn't mean like are you guys to sell because the best you wait for the buy entry. Okay, if you sell here, your stop loss have to put it above this swing high. That's it. If you want to sell. Okay, tight stop loss for the sell entry. But I want to see the market look like this. Like look like this. Break below this. Okay, they need to close below here. Let me look at the dollar. Okay, that may the reason that go is bounce because dollar is somehow close the gap and bounce. When was this? Oh, this should be when Trump like speak something, right? Yesterday. That's why you see like a selling off dollar. Let me find the key level. Basically has closed the gap already. Okay, it's closed and then it bounce off. Where is okay, this is gonna be the key resistance in the lower time frame, which is M15, meaning that if dollar could break above, pull back, they might continue to go uptrend. Okay, now we start to see they make a lower high, and this is the resistance level in the M15, right? So you're gonna look at the um the goal. We want to see goal is pullback. Okay. EU start to fall as well because dollar is rising, right? GU will be falling, but gold has slightly pulled back, but now it's rising back up again. Okay, this is the EU and EU H4 since they make a break of structure here. Okay, again here, even like here, you really can go to like this -2 for like a TP1, TP2, TP3. Now we see the pullback. I will see the pullback could be here. This is going to be like a first support level or pullback support level. It's here. Okay, and you can already see a pullback, right? And let's say if they really close below, so it's going to be the first support. The second support for the EU is going to be here, meaning that they might want to close the gap. There's a gap. Do you think it's closed somehow? This is the second support. Okay, this is the second support. Look at the GU. It's the same. GBP, this is going to be the first, going to be the pullback. Second one would be here, support level. Okay. So you go to H4, right? You see there's a demand zone here as well. The resistance, talking about the resistance, on the left, that would be I'm gonna put this refers to the extension with the first resistance level. Right now we're gonna see the pullback because dollar is rising. Is dollar is rising already? Yep. Okay. Dollar is somehow rising. Now we need to see whether they're gonna break above this resistance level. Any pair guys you want me to see beside EU, GU? Let's just talk about the BTC. I think the BTC now um they heading to the resistance. So this is the resistance, right? That I would say I like out watch out. And now you see that it break. They're gonna pull back. So this one is become our first support level. Okay. We put this for swing at our second support. And perhaps you see that has break below, has extension, and then rising. Okay. So this is the level, meaning if I pull here, you can buy and you can target this level. All right. Any pair, guys? I'm gonna touch off with gold. Okay. Just in case if you want to buy to sell, let me do the gold analysis. I think I need to go on a higher time frame. This is gonna be the weekly. Okay, let me use the um projection now. Okay, I think the next potential. I'm gonna refer to this. Okay, that would be 5595 to 5600. That's gonna be the next resistance for gold on the weekly time frame. Okay. I only can use the extension and the rest trend line. I'm gonna use the trend line. That the only the not trend line, the channel. Only can use like this or the extension. Extension. Wow. You see that even the AU extension is more easily go above 361 extension for the daily time frame. Mm, I think for right now for gold, I think we might have to here. And even the gonna based on this swing high, it's gonna be like 5,700 or I'm gonna use from this. Okay. So now this if they break this first resistance, I'm gonna use this the projection. Okay. Can you this? Cannot. It seems like breakout. Okay. Don't use this. So this is only number. If they break out this, then we're gonna see go to this 555660. Okay. That's it. Because they never pull back. If you want to buy, you only can wait for price to pull back at this level. Okay, guys. If you want to buy, this is gonna be the zone as 5,100 in H4 time frame that the breakout. If you wait for the pullback, that is the only zones. Okay. All right, guys, that should be all for today. Okay, since you guys don't have any question, I'm gonna catch up with you guys again on next Monday. All right, guys, thank you so much for joining. See you again next week. Okay, go, just let it go. Okay, because it's so crazy. It never pull back for us to to buy to buy at all. Okay, unless if you have a cost early when the market open, you buy. They're happy for you. Okay. Bye for now, guys. Take care. All the best. Good luck. Bye bye. You're welcome. Bye.